Hello, this is Rob Lambert with AssetProtectionTraining.com. Today I'm going to deal with reporting your offshore bank account to the IRS, keeping Uncle Sam happy. You all know that I do think that offshore is about the only real safe place that you can put your money if you're under creditor attack. There's many videos as to the multitude of reasons why I believe that, but to do that, you all are going to need an offshore bank account. And as most of you know, offshore bank accounts are different than going to Wells Fargo or Chase or Bank of America. Those banks offshore really take care of you, and they allow you to trade securities, and they have a lot more confidentiality, and literally a good 15 of them are stronger than any of the banks in the United States. And although there are videos on choosing bank accounts, don't forget my rule. Always stay with Fortune 500 level banks. Nothing less than Bank of America, Wells Fargo, and Chase abroad. And believe me, there are plenty of stronger banks than those. And don't deal with the boutiques. Deal with the big ones. But that's for a different video. Today I'm going to show you how to stay out of trouble with Uncle Sam. And it's really very simple. First, I want you to take the problem or the issues of doing business internationally very seriously. The U.S. government is being cheated out of over $100 billion a year by people failing to disclose or fraudulently reporting income from offshore bank accounts. It's a big deal. It's serious. The IRS is going to get to the people that aren't reporting offshore bank accounts. And if you think you've slipped through a crack, think again. You haven't. The IRS knows every single bank account abroad, at least every single bank account abroad that has any relationship with a U.S. bank. And you can't transfer money without a correspondent relationship. So the Patriot Act has given the U.S. government access to any and all offshore bank accounts. In addition, they're spending a large amount of money and energy interviewing banks, buying information, looking for cheaters. And the deal is very serious. The penalties are extremely large. Now, first, take it seriously. Don't mess with the government. Don't mess with the government. I'm going to show you the FBAR, the FBAR form. It's called the TDF 90-22.1. I don't know why it's such a dumb name, but that's what it is. It's a little form. It's due on June 30th. It has nothing to do with your tax return. All it does is says, I have an offshore bank account that I either sign on or I control, and it had basically $10,000 in it. Any significant activity, any significant control, even if you're not a signatory, requires that this form be signed. Don't mess with it. Don't walk a tightrope. I'm not even going to go over how to walk a tightrope because it isn't worth it. If there's any doubt, file the form. The form doesn't increase taxes. The form doesn't expose you to more audit. The form is a nothing form. And it just simply keeps you out of trouble. It doesn't create any problems. I want you to look at it. All they want, see part one, they want your name. No brainer. They want information on the organization because it can be an organization and not just an individual. It's really short. Look at it. And I'm going to be giving you this form. You don't have to read it from this video. Really, no brainer. There's some simple instructions. And then each bank account has a separate box you fill in. You give them the bank account number. You talk about the maximum value of the account during the calendar year. See, this is number 15. Each account you have to do this. It does not, I want to repeat, it does not increase your audit risk. But I'll tell you what, having your money abroad certainly increases your safety and keeps your creditors from being able to get to it. Same thing with part 3. It's a separate block for each jointly owned account. It's a no-brainer. It's a no-brainer, no-brainer, no-brainer. You can see it's done. The whole form. I'm just flipping through it. Here's the instructions. Look, it takes less than an hour to do this form for the typical client. Don't mess with it. Don't be sloppy with it. because remember, there's $5,000 penalties in some cases if you are willful about your failure to file. You can go to jail for 5 years and pay a $250,000 fine. It simply isn't worth it. Now, don't forget your other tax forms that are required if you have a foreign trust. Again, these are informational returns. They take a very small amount of time to do. That would be primarily the Form 3520. I will be doing a video on the 3520 form and giving you a copy of it too. And again, I recommend that you don't try to do this yourself. This isn't do-it-yourself work, but don't be afraid of it. Don't be put off by it. The price of having safety is disclosing information to the IRS. Thank you for listening, and I hope to be talking with you soon.